To the Philippine Benchmark Index now, the PSEI closes the first trading day of the week flat. It closed higher at 64.44, joining the regional upswing. Value turnover was at 3.6 billion pesos. Joining us now for a take on today's trading, as we have Sandra Araullo. She's the Chief Investment Officer of ATR Asset Management. Sandra, welcome to the Business Roadshow.
Hello, Stanley. Good afternoon.
Hi, Sandra. Now, we have postponed rate cuts by the Fed and the Banco Central. Of course, the worsening conflict in the Middle East still weighing down on most markets, including our own PSE, although it did better today. Now, with share prices still finding a bottom, are investors likely to stay away for a while from these markets?
Yeah, there has been quick repricing of rate cut expectations, no? We've seen that in actually a two and a half week period. Ourselves, for example, we've been invested, and we think that the timing is really going to be a driver of volatility, and it doesn't necessarily change our own view insofar as expectations of easing rates. Again, it's really a matter of pricing the timing of such, and of course, there also happens to be the consideration of the risk that there is that cuts don't happen at all this year. Yeah. So again, it's just the market trying to determine when the inevitable is going to happen, and in the meantime, you will see that reflected in market prices.
Okay, if you be optimistic about this, actually, the situation, I mean, you have a situation where investors who gained in the past 3 months are just locking in profits, and, prices are already going down again to attractive levels. Many analysts we've spoken to are also seeing good bargains at these price levels. Now, is this a good time to actually add to positions?
For those who are still uninvested, yes, we believe so. Not just on the equity side, but also on the bond side. We were of the view that rate cuts are likely to happen in the second half of the year or starting in June. But there happens to be new data that pushed back the possibility of the cuts. No? So it's giving us another window of opportunity, or it's giving those who still have cash to deploy that opportunity to catch the market at bargain prices, to catch bond yields at the higher end of the range. And so definitely we think it's just you're giving the chance to those who haven't put their portfolios to work a chance to deploy.
All right, so it's bonds as well, aside from cash. Now, Sandra, are you seeing flights to safe havens these days? You mentioned bonds, gold prices are also going up?
Definitely, we've seen a flight to quality, or at least risk of assets, particularly short-term U.S. Treasuries. So very indicative of the reactive nature, So it's the geopolitical flare-up, or the escalation of the Middle East conflict that is driving this reaction. The end user investor or institutional investors, though, we think are not reacting that way necessarily. It would be even in our own market. I think what drove the market higher in the first quarter of the year, or starting the fourth quarter of last year, have been more hot money, opportunistic, maybe the hedge funds, and they've made their gains, so they're just taking some profits off of the table. We've been still very dependent on flows as far as market direction is concerned. I think we have some work to do from a capital market development standpoint, and that is underway. So while there has been a flight to safety type of trade that's very short term, I think, or very reactive to the geopolitical risk that's taking place. But for a more strategic, with a more strategic standpoint, I think the view is still very much intact around trend growth, at least for the global economy, coming down of inflation, and easier monetary policy.
Okay, and for those who want to stay in riskier assets like stocks but have a very short-sighted view, what is your horizon? How does it look like? Do you think prices will stay in consolidation patterns even with positive, corporate earnings to balance off the negatives, the other macro factors that have been driving this market down?
Yeah, so we think that at least for the second quarter, it's going to be a range between 6,200, 6,700.
Okay.
Nothing too exciting.
Yeah,
But that
yeah.
said, there are names in the market that have been more unfairly priced in to a too bearish outlook or a too bearish scenario for rates, no? So you have the likes of those rate sensitive names, Ali, for example.
Yeah.
So broad market, it is a good time to still time average and deploy at these, markets at 10 times PE, no? So from a fundamental standpoint, and as fundamental investors, we like that. But we are cognizant of the drivers and the catalysts in the short term. So because we are fully invested and we have other vehicles as options, we are already invested in the market. Right now, we're a little bit more balanced in terms of deploying to fixed income and equities, not necessarily favoring one over the other, because we've also seen a big price adjustment on the fixed income side. And just to manage the risk, a more balanced approach to exposure is what we're positioned for.
Okay, Sandra, let's talk about pricing in the global conflict. Last week, the possibility of Israel retaliating against Iran or Iran retaliating against Israel was stoking fears in most markets. But so far, Iran is saying it will not or may not launch a counterattack. How are you pricing in the global conflict now? Is it better than last week?
Yeah, I think it's going to be tit for tat in terms of back and forth, and risk of escalation, kind of just having that threat, no? And so again, on the short term, you have flight to safety trade. But that said, we don't think that the conflict in the Middle East today is comparable to the Ukraine-Russia conflict that really affected oil and other commodity prices, wheat, and so the effect from that standpoint we think is managed. Oil prices are definitely something that we're keeping an eye on.
Yep.
Also also gold prices. So we do know that in regimes where rates are high, typically gold prices are in the opposite direction. But lately, you've seen positive correlation, meaning gold is also hitting all-time highs.
Right.
So we think that reflects that again, flight to safe assets type of trade. We're mindful that it's mostly the central banks that hold gold. So, we're trying to reconcile maybe what they might know that we don't. So there are a lot of signals in the market, definitely, that is helping us point our direction towards how to manage through the conflict. The hardest thing to manage through really are these geopolitical risks, because they tend to dislocate markets really far away from fair value or from fundamental values. And so pricing that risk or that geopolitical risk, really you need a lot of input or try to get a handle on what that pricing might be. And today, relatively speaking, because of the acute nature of the escalation, we do think that there was a knee-jerk reaction to try and rush through the doors might not prove a prudent approach to managing through the conflict, because what tends to happen is you get whipsawed. You sell at the high and you sell at the low, and then when the risk dissipates, you're caught open or you're caught without a position, and then you have to buy
At a much higher price,
and then
right?
that volatility just whips you around.
All right, Sandra, let's take a look at some of our top stories today, starting with BDO securing shareholders' approval for its merger with Keppel Land, SM Keppel. What do you make of this development? How substantial is the deal in favor of the country's largest lender?
So we do think that the merger is done for tax improvement and capital efficiency. The effect of the merger to BDO will be to issue new shares to itself. And, it's going to create 16 billion worth of treasury shares. So normally, this would not be a problem, resulting in treasury shares that could be canceled. However, there is that consideration of the Banking Sector Act that does not allow banks to hold treasury shares.
Okay.
So if a situation results in treasury shares like a merger, then the bank must dispose of it within 6 months. So these are considerations in the deal, and whether it's positive or negative, it's quite fresh, and so we're still digesting all of these implications for BDO.
All right, here's another one. Sector news, Atlas Mining booking ₱500 million in net income for the first quarter of the year. That's up 113%. Now, many other mining companies are still challenged, though. What are the prospects for mining in 2024? Isn't this supposed to be a recovery year for the sector as well?
So we've seen a lot of mining companies benefit from elevated commodity prices post-pandemic, but it's relatively cooled off. For the year, we see a bit of a mixed bag for Philippine mining companies.
Yeah.
So the strength in demand still outweighs supply. Atlas for the first quarter was able to capitalize on higher prices and take advantage of their mining output for the period, no? Nickel saw some recent price recovery, and a lot of supply has been coming in from other sources like Indonesia. So overall, the mining sector may see a recovery with the Philippine government being more supportive of the sector. But the sector will only be able to sustain this in the context of commodity prices, not being too volatile. So I think that's the crux. They need to be able to manage cost inflation in order to go from recovery to growth.
All right. On that note, Sandra Araullo of ATR Asset Management, we thank you so much for joining us this afternoon. Have a profitable trading week ahead.
Thank you, Sammy. Thank you to your viewers.